go out a weak dollar, plays emerging market, and rate sensitives, REITs. All right, semicolon. There's that E.E. Cummings stuff I'm telling you about. Nibble at emerging markets and domestic rate sensitives with the stock market at 5,400. Remember, this is written Thursday before the number came out on Friday. Nibble means very low. I'm sure he didn't mean a lot. SPX 51, 5,200 by policy pivot. Okay. So let's try and put this in context. He's saying where to buy first, meaning what assets to buy first, emerging markets and financials based on a weaker dollar. Trading levels that make him comfortable doing these things, and coincident signs of a bottom. That was what I just described. The next part, if the I'll just clarify this. I didn't say it right before. If the SPX is roughly between 5,100 and 5,200, then you're buying stocks on policy pivot plays. Now, what are policy pivot plays? I'll read the laundry list to you. If the Fed cuts, the US talks about tax cuts, and the EU and Asia start easing, well, then you pile into US small cap, retail, and home builders, EU cyclicals, and Asia tech. All right. So this whole thing basically says the first thing you're going to buy is going to be interest rate sensitive. So you would buy housing REITs. Okay. You would buy small caps, which do better under low rates for a bounce. This is a trade, not an investment. Okay. He's apt to only nibble if the SPX is 5,400. He's apt to buy a lot more if the SPX is 5,100, 5,200, and we see signs of a policy pivot. So the Fed says they're going to cut, then the bottom is in. If Trump starts talking about tax cuts, then the bottom could be in. If the EU and Asia start easing, well, that's actually an acceptance of the tariffs, and they're going to fight it by easing. Well, then you're going to buy, as I suggested, U.S. small caps, retail, home builders, and home builder real estate investment trusts, EU cyclicals, and Asia tech. There you go. That's it. So he's looking to buy at 5,400. Let's hope he didn't yesterday. And he will start to buy a little bit more heavily if we're trading above 5,100. It's probably a technical level for him. And the Fed says, hey, I might cut. Or Trump says, you know what? It's tax cut time. So those are the levels that you care about. All right. Beyond that, if there's a recession, if we have an official recession, however that would manifest, whether it be in GDP or what have you, it's down the road a couple months. Wait for the SPX to be below 5,000 and go all in on risk once Trump triggered by a low 40, 50 approval rating and higher unemployment claims. That's great. Okay. So the worser case scenario, but still not that whole disaster thing I just mentioned, is we go into a recession, stocks go below 5,000, Trump's approval rating drops, and then all of a sudden, he's got to do better, right? So he's going to hammer Powell for more cuts, or for cuts if he hasn't gotten them yet. He's going to do something more fiscally oriented, and there's going to be a Trump put triggered. However that put manifest, we don't know. But I think if you want to look at one single thing right now, using the Hartnett mindset, is as Trump's approval rating drops, even though he's not up for re-election, his case drops. We mentioned months ago that the first 100 days were important for him because if he doesn't get materially done what he wants to get done, or at least show progress on it, then midterm congressmen and senators are going to say, you are no longer a mandated president, you are a lame duck president. And so he's going to have to get his approval ratings up if he wants the rest of the GOP to stick with him. So if his approval rating drops, in conjunction with high unemployment claims, low stock, well, there's going to be a Trump put triggered, whether it's a stimulus check in the mail, whether it's tax cuts, or whether it's hitting Powell over the head until he actually cuts rates. I don't know, but that's what he's saying. Okay. Moving on. Weekly flows 22.5 billion into cash. Remember, this is Thursday. 9.4 billion into bonds, 2.5 billion into gold. The first dip was bought, and 2.1